The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on the 23rd day of February. My pleasure to be here Monday through Friday on market days. Well, wasn't here last Friday. I went away. I was down in Durham, North Carolina. Also got to see Chapel Hill, where my brother once went to school for a little bit, and my oldest nephew was born. Geez, pretty down there. Wow, it was pretty cold. It was as cold when we arrived as it had been here in Boston. Unbelievable it was, but it's different because it was frozen. I mean, there wasn't that much. It was more like shaved ice, more than snow, but ice on the streets. Very, very tough conditions, but beautiful warm day yesterday when we left. So back at the ranch, what we're looking at, and I do want to mention, thank you so much to those people who participated in my webinar. I had just a ton of people. I never anticipated that many people. And send me any questions you have. Send me any information on what you're looking at in terms of what I discussed, because I'm always interested in that. But do me a favor, don't just send me a link or something with nothing. I need words. I need you to say, here, Basil, or something like that, because otherwise I have to treat it as junk mail. I never open anything that isn't specifically directed towards me in a personal way, because I'm not prepared to take a chance on all my different computers here. So thank you to Tom and John. A couple of great hours there and discussing the various techniques that are available, and especially with John's systems. And I would like to also mention here that we're all about education, and part of what I really love is that when we're talking about education, it means what you specifically can get out of anything. You don't have to get, someone mentions 20 different things. You don't have to get 20. If you get just one idea that is able to generate profits, that's really what we're here for, profits. That's all you need. That's number one. Number two is, you'll be amazed. I've always been struck over the years how when I'm studying anything new, how there's like one thing that jumps out and says, man, that's great. And then there's this fuzzy morass, this stuff that just lurks out there saying, you didn't get me, you didn't get me. I want the stuff that just jumps out at me, and I want it to stay. And that's why I always say that the Chapman Wave methodology is a methodology that I would like for you to incorporate. It isn't like the next day you're suddenly using the Chapman Wave. I remember when I used to teach music, teach clarinet, and I'd be, say, a student would be playing a Brahms clarinet sonata, and they'd play a phrase and then look up at me, and then I'd look up at them. And then they'd look up at me, and I'd look right back in the same face. I'd look at, and then they wouldn't know what was going on. And I'd say, hey, it's not me. You're the one that's telling the story. It mustn't be my story. It's got to be your story. If you use something that I'd stared, that's great, but it's still got to be your story. So it's got to be your technique. Otherwise, you haven't got a thing out of it. So remember, what you want is not just to blindly listen to someone. You want to be able to incorporate it into your thinking. That's really important. You also got to understand how there are other factors. If such and such can happen, what would be the opposite effect? What would happen if it didn't unfold? Those are the things you look for. So that's what we're all about here at TFNN, education, trying to become better and better at the craft. And let me run the numbers. Dow's down 44 at 18,096. The S&P is down 3.5 at 2108. The comp index is down 7 at 49.48. Hey, I have to look and see. Is that Apple? Is Apple actually down today? Apple is... No. Apple is up $1.96 at 131.45 in leg C. Oh, what an incredible move. From 105 to 131 in the space of, what, 4 weeks, 5 weeks? That's fantastic. All right, so let's just go back. And now what we're looking at is gold is about unch at 1204. It hasn't been acting very well. High-grade copper is down a fraction at 2.59. You've got bonds. Well, first of all, dollars are 0.33 at 94.58 within that trading band that we discussed last week, which means that the euro is in the trading band at the bottom. And you've got bonds right now. The TLT is at up 0.91 at 127.45. That 126 area needs to have become pretty good support. And so far it is. I'll give you my my analysis in a moment of the markets and where we are, but just let me quickly do this. C for Apple. I just wanted to show you something very interesting. What I discussed with the folks in my webinar based on the 28-29 match with where we are now, the match and mismatches, there are a couple of things that are very important. And the first thing is you got to go step by step. And the first step was that I needed to get to leg D in the Dow weekly chart. That would make leg C probably in the weekly of the S&P, the diamonds, and the SPY. Because the diamonds and the Dow are out of sync right now in the weekly charts. All of that says to me that there's a really good chance that we still have to wait. Now, this is going to be so difficult. We still have to wait for the weekly chart of the S&P to go to leg D before we can start thinking of the short side in these major indexes. Hey, that's just my opinion. Other people might have other opinions, but that's my opinion. Here's the other thing, and this to me is very important. Within the context of the E-mini, that's the S&P March E-mini, the 120-minute chart made a peak D at 2108.75, testing the highs of the rectangle formation that I drew in here with 2099s as the support level to watch. Went all the way to 2099.75. I needed it to crack just a little bit lower to actually fulfill what I'm really looking for just on the very short term. And then the Chapman Wave Chin Gauge flashed on Friday and suggested that there was a good chance that from a low in the S&P futures, there should be a very strong 7 to 9 point rally, and that rally should impact the cash indices as well, S&P cash index and the Dow cash index. We'll see if that's going to transpire. Right now, though, this is leg D with a chance that we might make a peak D if we don't go above 2108.75 today. We're at 2103, down 325. Not a big deal after such a big move on Friday. And now let's do this. Oh, and let me also just mention, because I'm bound to forget to mention until the very end, I'll be sitting in for Larry Pitt's event. I didn't realize he'd be away this week, and I do at that hour that I'm able to do Larry's show. So we've got a chunk of time here. So I'm going to be going through these step by step. I don't think I'm missing anything yet. I had a question in the den. Oh, well, first of all, Fletch in the den mentions Clark Terry just died last week. Well, he died last week. Rest in peace. And Clark Terry was a jazz trumpeter who played with a long list of greats from Count Basie to Quincy Jones to Bob Brookmeyer. And he died yesterday. Well, this is when the report was made. He was 94. 94 years old. I mean, as long as I've been around and listening to jazz, Clark Terry has been there. And what a wonderful musician. I put him into the category of the Quincy Jones, the ultimate superstar, and kind of background superstar, in the sense that a lot of people, unless they're involved in jazz, won't recognize the name Clark Terry. And he's 94 years old. And that's what happens sometimes in music in all fields. There are people that are just outstanding, but they're already background as far as the media is concerned. It's a great shame, but maybe that's the way you want. I don't know. But whatever it is, yes, rest in peace, Clark Terry. Thank you for everything that you gave us. Now, we're going to go to the markets. I'm going to do something a little differently. I'm going to discuss the VIX index, and then I'm going to show it in relation to what the volatility index, let me just move this away. That's the 120. We don't need it. What I'm looking for, and I'm, predicting, I had shown something last week when I did my webinar about Babson, Roger Babson, and he called the market top at least 3 times. He missed about a 60% move into the upside from 1927 into 28 and then to the 29 top. But the very first week of the turn down, he got it right and he nailed it. So you're only as good as your last call. But, what can I say? Let's try it. What I've noticed in the VIX index monthly chart, as I was looking at over the weekend, that 200-period exponential moving average right there, that golden line, that kind of brownie golden line, and UT in the den says Leslie Gore passed away last week. Then it plays some Leslie Gore at the top of the South, Sunshine, Lollipops, and Rainbows. Well, there again. Thank you for what you gave us. So now what I'm going to do is I want to just take a look. I thought I'd see it on the, maybe it's still playing. Let me just check. Yes, there it is. Okay, no, you can't see. It's not big enough. I moved across to one of my screens because I've got the live chart that you can see. And since we're made up here of wanting very much for our audience to be able to identify visually because of the fantastic graphics that we've got at TFNN, I wanted to see that you could, now you got it. You see the golden line right there? Yep, that golden line. That is a brownie gold, yellow, brown, I don't know, whatever color it is. That's the 200-period exponential moving average. Using that line alone, look how the VIX index has been repelled, except for 1 month. This is a monthly chart. Except for 1 month where it closed above, and that was in May of 2012. Going back to the major spike in September of 2011, only once has the VIX index closed decisively above the 200-period moving average, and then there was once last month, January, where the last day of January, it closed just a fraction above the 200-period. So let's be as objective as possible and say 2 times. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. And this will make it 7 years. Oh, it's exactly 7 years. September. No, it's not. 6.5 years. It's 6.5 years. Only once has the VIX index closed above the 200-period exponential moving average. I'll be right back. We'll discuss this in a little bit more detail. When I get back, Dow's down 38, 877-927-6648. Love to hear from you.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
If our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Just a quick couple of questions. The den one is about red, right? I personally would wait a little while. And FEY is called FireEye, I believe. Yep, FireEye is making a leg E, probably a peak E right here. I wouldn't be buying it right here, even though it's leg C in the weekly, and I'd rather wait for a pullback to maybe it's at 44.18. I'd rather wait for a pullback between 42 and 40 to consider it, because that weekly chart is very strong. But if you buy it right here, you got to. The risk reward is really high, but thinking that it's going to go higher to a leg D, you could maybe have it has to be a much smaller position if you had to buy it here. If you're in it, hold it. It's looking great, but be prepared that it could pull back 3 to 4 points. Let's go to Mark in Denver. Mark, how are you?
Good. How are you?
I'm well, thank you.
All right. So you keep teasing us on your opening call with XLF, and I bit a couple times. I'm in between 24.10 and 24.20 in the last week, and have a position. Looks like it's in a gray leg daily B, and
yep.
the weekly is made of B.
And
I'm a little confused about the monthly, but I don't know if that really matters.
Let me do this. Let me just, while you're here, let me just open up. Let me change the space to the right, and you'll see this is what we had drawn in a little bit earlier, sometime, I think about a week ago.
Yeah.
There it is. So I showed an arch from a cup formation with a left side, right side price time match, which said that the XLF should rally. And if it's going to rally, I'd only be comfortable if it got to like 24, 60s or something like that, and try to touch that pink dashed line, which I call the Chapman wave, inside wedge, target price line. And one of the reasons is when it works, and there are different places to take it from on the left side, but when it's visually accessible, in other words, it's quite easy to see where your peaks are that you're going to be looking at, then what would happen is that this pink dashed line becomes a magnet line, and the next level really is 2475. That's kind of the area that I'd like to see. You know, I decided that just as of this moment, I like the look of the XLF, but I didn't, because of the action on Thursday, touching the 9-period moving average, I thought there was a chance that it could close under the 9 EMA. And what happened is it went quite a bit under the 9 EMA. The 9 EMA was around about 24.27, and the XLF, the Select Financial Spider Fund, went all the way down to 24.07, which is a pity because I probably would have missed it, but my thinking was that if it just dipped under 27, that would be a nice entry point. I should have put it in. I didn't put it in. And then today I thought, well, after the move on Friday, I have to have a little patience. I don't want to actually put it in. I want to see how it does. So I didn't have it in my opening call. And the reason is I thought there'd be a pullback today, and I've got this Chapman wave chin gauge flashing, which says within 2 days, unless there was an options expiration aberration, which has happened maybe twice over the period of 2 years, maybe 3 times, where it's missed almost every other time. It's been just a fantastically accurate indicator that I've developed. And it says that there should be a rally of between 7 and 9 S&P futures points, which should translate into a move, not always a commensurate move. Sometimes it's more, sometimes it's less, but at least a very nice spring, trampoline spring off a low in the cash S&P. Maybe we've already had the low of the day and the low of this particular period, and we're going to be moving higher. I personally am saying I hope not. But what I was thinking that if there was a move from the close of the XLF on Friday, which is at 24.44, I wanted to see how 24.20 would be tested. If we close towards the low 24.20, then I thought, now I've got a chance with a nice inchy risk reward on the XLF. Now it's going to be tougher for me. So I'm real pleased that you independently have decided to put your positions on, because I think you have an edge on me in that it's already tested the 200-period exponential moving average, bounced nicely, went over the 9-period moving average. Now the 9 EMA at 24, about 36, is going to be tested as whether it's going to be a springboard or a repellent zone in the shorter term. So you are in the trades, and your average, at this particular point, your average cost is still, you're in the money, right?
Yeah, it's about 24.15 average.
You see, that's really nice. So now let me suggest 2 things. One is that you use the 9-period moving average as a potential springboard to see whether or not it closes today or tomorrow above 24.40. Well, we've got a break coming up. Let me take a moment during the break. There are a couple of things I want to finish the notation on the 220. So can you hold on?
Sure.
We'll be back with Mark in Denver looking at the XLF, which is the S&P Select Financials.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back, and we're looking at the XLF together with Mark in Denver. And so far, I like that. It's down 10 cents today at 24.34. What I'm going to suggest is that there's a pattern that I call the falling axe that's just being formed right now. And if there is a break above 24.48, it should go very quickly to leg C above 24.57. That's the pattern that I'm looking at right now. I also looked at Goldman Sachs, and I think that Goldman Sachs is acting much better now. It's started to get its act together. So it's an incredible thing to be saying that about Goldman Sachs, because there's been such a long period of lack of leadership in the stock. I don't know about the company, but in lack of leadership in the stock, it was just an absolute leader for decades. In fact, I didn't have a chance, but on Thursday night in the webinar, I just showed briefly a little bit of history. You could see it. I didn't discuss it much about Goldman Sachs back in 1929, became an IPO and it started buying companies, etc., and had a fantastic year. So it's just been doing this for every single one of our presidents or the economic people that surround any of the presidents, and in fact, and many of the people that have surrounded the presidents have worked for Goldman Sachs. It's like an entry into the major league world of politics, and all of a sudden it hasn't been acting as well. I shouldn't say all of a sudden. There was a period where it hadn't acted all that well. And then from the December high, it had a terrible January, going from 198 all the way down to 172. For Goldman Sachs, that's a pretty deep, quick pullback. Now it's coming back, and I suspect that it's also saying that at 93, what was the percentage? At 91% in the stochastic, and the MACD is still good. It should help the XLF, and the XLF has the stochastic at 86 or 87%. So I think it's good. One of the things I'd be looking for is what happens if and when, you're not going to be worrying about this because you're going to be happy as a clam, if it gets to the 25.14 level, the high of the 29th of December, or 25, that's 14. What was that high? That was 25.07. Yeah, 25.14. That was an aberration. That was a leg F and G. I should have changed that. It was F and G, and then it failed in the XLF, and it came down strongly to the 23 level. So 2308 level. So I think that you've got some upside here, and the reason why I'm spending a little time on it is because, for me, the way I'm looking at it, I'm suspecting that if there is a March sell-off, a very strong sell-off, we might have seen some kind of a double top in the XLF, retesting that previous high, making this U-shaped pattern, and how deeply it falls, if I'm correct, about into March and April, if that's the period of decline that I'm looking at, and a pretty deep percentage decline in the markets. How far does it pull back? Is it worth looking at this right now as if it was an intermediate term buy? And I'm suspecting, and one of the reasons I've been a little hesitant about going long is I don't really want to go long for 25 cents or even 60 cents. I'd like this one to give a real pop towards the 25.50 area. Even from here, I'd like to go at least $1 higher. And at this particular point, I think it's struggling. That's one of the reasons why I'm stepping back a little bit on some stock indexes that I really like, is that the percentage left, it's very hard to decipher, but it doesn't look as if it is that big. So we're only talking about 5%, 7% maybe left on the upside in the XLF. I don't know, I might be wrong. So being in the position right now is good. So this, my parameters are, as soon as it's a break of this downtrend line, it should be moving high. It should start leg C, but I'd be watching it closely, because a close below 24 to 23.90 says you've got to watch it real closely, especially after Friday.
Do you see it? Do you see it in? It's in a weekly leg B, correct? And then do you have a monthly count on it?
Yes, monthly count is a D. It's made a peak D already.
Okay.
And this is the very interesting thing, that there's no other count that I can give the weekly at this particular point. It looks like it was a peak B. It was a pretty serious decline in pattern terms, but it held the up channel support area, and that's very good. And now it's holding the 9-period moving average. So I wanted to complete my thought.
Okay.
The reason why I'm spending time on XLF is that if I'm correct in my thinking that we're going to have a pretty big sell-off come March, or when I get that leg D in the S&P, if right, and we pull back sharply, then I want to see which sectors are going to pull back and how they're going to pull back, and which sectors will be ready for the next big move to the upside. And if once again, there's that whole pattern that I'm talking about, that matching pattern that I've been using, and if that's correct, then the XLF, I think in the second part of the year, is going to come on really strong. And I don't know how that's going to play out. That's just my thinking from the pattern formations at this particular point. But it might be tough getting in the 24s or high 23s to have it as a buy and hold through the next decline. And that's the test. So I'm making it too complex. I'm probably saying, hey, I should be saying to you, hey, this is great, you're in. Stay in and just raise your stop on one part of the position and try to keep the core. See if you can hold it all the way through to July, August. But I can't go that far ahead because it was such a deep pullback from peak B to the support level. If it didn't, if it had stopped at 23.70 on the way down instead of going to 22.89, I'd be much more comfortable saying, oh man, the next pullback is going to be a major buy in the XLF and that whole sector. But because it was a little deeper, there's always something in the charts to say, but what if, what if I'm wrong? So that's the way I've got it. So you're in the right position, and all I'm saying is that I'd be raising the stop as it moves up. Be prepared to take something off one of the positions. Maybe if you're still lucky and you're holding on through 2 weeks' time, and it's above 24.70, maybe it won't pull back as much as it seems to indicate it wants to in the weekly chart. We'll see what happens. But you're in the right position. Let's talk about that other stuff later on.
Thanks, Basil.
Okay, thanks for calling and bringing it up. And I'm going to have to make a note here because tomorrow I will talk a lot more about the XLF. There, and I circled it. Let's see if I actually remember. So now there's something else that I wanted to do. Wait, there's a dump me in the den. What's the weekly count of Goldman Sachs? Goldman Sachs GS is a simple trading at 190.02 down $1.50. And it is in daily AB peak C if it doesn't make a new high, a recovery high today. And it's only in leg A in the weekly chart. And that's the reason. But this is really a potential F in the monthly. I say potential. I don't have clarity on that. Sometimes the waveform is as clear as it can be, and sometimes there's an area of fuzziness that says, if it makes a new high, it'll be really clear above 198.06. But until then, you've just got to respect that it might be F. I don't really think it's going to be F, but we'll see. So Goldman Sachs, the technicals are pretty good in the everything about the monthly so far. The technicals are pretty good. The weekly needs a lot of work. It really needs a new all-time high to be able to say that it's acting very well. So that makes it, there's always something in the charts, and sometimes it's better to be completely unaware of some things, and like a little kid learning to walk, and they're going for that glass table, and your heart just drops, and they go under the table and walk along as if nothing happened. Then they're going for the next corner where the TV is, and they just keep walking along as if nothing had happened. No bumps, no nothing, and your heart just keeps sinking, and they're just fine. That's the market. That's been the market since the March 2009 low. It's just constantly, no matter what you threw at it, it just went to high highs. Now I think we're going to a period where it's not going to be quite so easy. There are a lot of areas that could become conflicts for the market over the coming 2-3 weeks. That's all I'm thinking, and I'm going to have to deal with it just the way we do. And okay, so now the next thing. So we looked at the XLF. I want to the XLU. XLU is the utilities. Had a plunge from 49.78 to the most recent low of 44.73. That's only 11% to 10%. But you know what? This doesn't have that kind of pullback very often. It did have it at the end from June of 2014 to August. To August. But most of the time, it just doesn't do that. And this is a potential C/F in the monthly, a D in the weekly. And if you put it together with the TLT made a peak E in the weekly and a D in the monthly and a peak F in the daily. And now it's trying to form some kind of a base using the 126. Well, let's just say 126 to 125 is really critical for the TLT. Can it last in this area until it has a pretty decent rally in March? We'll see. I can't answer that, of course. We have to wait. Is that a single leg A up? Yes, it's AF/A. You're talking about Goldman Sachs again. After a while, you get to know what the questions are. Yes, that's an F, possibly a /A. But it would be very unusual to have this extension after such a move in an F, and the MACD is holding okay. It hasn't turned negative. It's turned down, but not negative yet, and the stochastic's still at 80%. And with the rest of the week to go for the monthly chart to complete. You're talking about from the 2009 low? Is this Goldman Sachs? In leg B, look, this is Goldman Sachs made a low of 84.47 back in October of 2011. It goes peak A to 128.72, March of 2012, pulls back, goes to leg B at round number 159 in February of 2013. Wow, 2 years ago. Then it goes to peak C. June of 2013, goes to leg D at 181.13 in September Oops, no, 170 in September of 2013, pulls back, and it goes to peak E at 176.98, and that is in January. Yep, January of 2014, a year ago. Could there have been a Chapman wave recycle? This would be a flat base, the formula that I use for a flat base restart. Yes, this could be A, and that could actually be B. So let's call it B/F/B. There you are. And what that suggests is that when it finally gets to D or an E, not only is it going to turn down, but it's going to come right back to this low right here, between 151 and 151 will be the target when it's completed everything. All right, so I'm counting from I just did it from 2009. What did I just do? That chart looked, yes, that was a peak A minus, and then we restarted. It had a peak A minus, another peak A minus, then another A, B minus. Then there was the proper start right there at 84.47. Yeah, so that becomes an inside buy, gray A, gray B, gray C, gray D, even a gray E, and only now at 198 have we really started the move above that A. And that's another reason to suggest that it's not a top of significance, but it's a top, and that we should pull back at some point and then go higher in Goldman Sachs. So, all right. Now, let me do this before my eyes glaze over with all these Chapman wave notations. I want to go, I had a question. Well, first of all, Cub, thank you so much for that those charts. I will be studying. Those are really interesting charts, very interesting. I just had a glance at it, and the comments are terrific. So I will be taking a little bit more interest in that. Apple, let's see, Mike wanted to know Apple, AAPL. Apple, I'm thinking this is a proxy for the market. I see it in leg G daily. It's actually leg C. Oh, and let me just move this over a little bit. Yes, A. Oh, I see. A, B, C, D. Oh, I tell you what I did. Yeah, G/C, you're absolutely correct. But it's an alternate wave count. One of the reasons why I want to call it more C than a G, I could be wrong on this, but I don't think it's going to, look, the MACD is really good for getting overbought, but it's still very, very good. The stochastic is it's at 97%, and that suggests that it should go a little longer before it turns down, and the on-balance volume is at an area that suggests it's getting real close as well. So if correct, this is G, so I better put it in because that's the correct notation, which is to say there's an alternate count, show it, so people can actually understand it. So yes, it's a G/C, but everything about it, and if I remember correctly, I did the 84. So this is A, B, C, D. This is leg E in the 120-minute chart. And that's the reason why I thought that today could see some kind of a pullback. And this suggests that Apple could have a little bit of pullback. Of course, it's having a pullback by going to 131.90, and it's actually pulled back 20 cents. So there's your pullback, 20 cents in Apple. I'll do a little more work on this Apple because absolutely it's very important to constantly be monitoring Apple. It is a very important part of the market. I'll be right back. Dow's only down 30. S&P's now down 190. Basil Chapman, Tiger Technicians. I will be doing Larry's.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. We're back. So let me show you what I'm looking at here in Apple. Apple is in... This is just a really good move. Actually, I had a question here. My mic says... VIX is up $1 and Apple is up $1.30 with an exclamation point. No. Right now, the VIX is only up 55 cents, and Apple is up $2.27. Just an incredible bout of energy, and you can see what's going on. That fund managers are saying, do I need the risk of all these other things? I need to have Apple. I need to have something like a mover that has shown absolute persistence, absolute integrity, a stock that you're being forced into. And these single leg A up patterns, like you're getting in the weekly chart, although I can count it as a leg D, it says when it concludes, yes, you might make a sideways rectangle, sideways trading band for a little bit, but at some point the price comes back and falls a good chunk of what it just did, unless it makes a high-level consolidation like a propeller shaft and then breaks out after a little period of sideways movement to the upside. Will Apple do that? I don't know yet. At this particular point, if you were long, it's like IBB. You just could have, those callers that we've had over the years have said we've bought and we've held and we might take a little bit off, but we're not getting out of this. At this very moment, they have just been perfect about their positioning. They don't even have to look at it. They just have to know that on every pullback, IBB is going to, this is the iShares NASDAQ Biotechnology ETF. And I had to apologize to my subscribers. It was last Tuesday that I had it typed. I said to buy the IBB the moment the BIS is taken out it was a 10-cent gain or something. We had just a tiny gain. We had a bigger gain. And I said that was a 200% short. And I wrote it in. I said, switch to the BIB. And then at the last minute, I suddenly said, it's getting a little complicated. Maybe I'll wait the day. So I said, let's wait the day. Oh, man. Can you believe last Tuesday was the 17th, I think? From the 17th, it went from 322.73 to today's high of 340. That is just one straight up move. Anyway, okay. Now, FireEye. FireEye doing very well, but it made a peak E at 46.18 on Friday, pulling back quite sharply. They're down to it. It's at 44.10. I like the action very much. Everything about it says it should go high, but I think it just needs to digest a little bit the gains that it made. So I'd be waiting, and if you're long, hold on, because it needs to still make a leg D. In the weekly chart, it's in leg C right now. So I would say if it pulls back between 42 and 40.50, that's a good time if you want to add to the position. I'd just be watching it real closely. You really don't want to see it go under 40.50. But at this particular point, it's one of the leaders, just like Apple, just on the shorter term here, with Apple's the long term. Here it's only just breaking into leg B in the daily. So folks, we're about to wrap up, but we're not wrapping up. Why? Because we're about to go to a break, and that break is the hour that crosses the hour, and I'll be taking over for Larry Pesavento. It'll be my pleasure to be coming in for another hour straight after this. So I'm anticipating, let me see my clock right there. Yep, I should hear the music any moment. I didn't want to beat the music. Sometimes I talk right through the music, or else I'm a little early, so today I'm going to be just right on time. I'm waiting for that music to come, and in the meantime, the VIX index is trading at 14.84, and what I was looking at in that monthly chart, it's saying that 200-period moving average at 20 is going to be absolutely critical going into March. I'll be right back. Maybe we'll talk more about the VIX index when we get back when I do Larry's show. Stay tuned. I'll be right back. And don't forget, my service is the opening call, and you can still get the webinar. Go to the front page of TFNN and check it out, and 30 days free of my newsletter. I'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.